Welcome to The Solo Investor. This is Focused Finance, where we share stories about ordinary people and their quest to shape their journeys to financial freedom. Imagine giving up a big paycheck for a stack of papers you can't even cash, and waiting years, not knowing if they'll ever be worth anything. That's exactly what Michael Chan did in 1996. While friends chased big salaries and new cars, he chose patience, discipline, and stock options. 7 years later, that decision made him a millionaire. This is the story of how one man quietly built generational wealth, and how you can apply the same strategy today. In 1996, Michael Chan was a 32-year-old software engineer living in San Jose, California, the heart of a rapidly growing tech world. He had worked hard to build his skills, and it was finally paying off. Multiple companies were courting him with job offers, some promising salaries nearly double what he would ultimately accept. But Michael didn't follow the money, at least not in the traditional sense. He turned down the highest paycheck and chose a little-known software company that most people outside the industry had never heard of. Why? Because this company's offer came with something almost no one in his circle was talking about: stock options. Not cash in hand, not a bigger signing bonus. Just the possibility of future value if the company succeeded. To many of his friends, this sounded like gambling on a long shot. Why take less money now for something that might be worth nothing later? But Michael didn't see it as blind risk. He saw it as a calculated bet. He spent evenings researching the company's leadership team, seasoned executives who had built successful products before. He dug into their flagship software, recognizing it solved a real business problem, not just chasing the latest tech trend. And he noticed their customer base wasn't just growing. It was growing steadily and sticking around. In Michael's mind, these stock options weren't lottery tickets. Hey, they were an investment in a company with solid fundamentals, an investment in a vision he believed could transform an industry. And he was willing to take a smaller paycheck today for the chance to turn those options into something far more valuable tomorrow. But while Michael's decision made sense on paper, living with it was another story. The reality of a smaller paycheck hit almost immediately. Rent in the Bay Area was climbing every year, and his wife had just left her job to care for their newborn daughter. Their expenses didn't slow down, but his income had. Many of his friends were driving brand new cars, moving into larger homes, and talking about their annual bonuses. Michael, meanwhile, was still commuting in his aging Honda Civic, living in a modest 2-bedroom condo, and running the numbers every month to make sure the bills got paid. Vacations? They weren't flying anywhere. Most trips were road journeys up and down the California coast. Even buying a crib for his daughter meant scanning the local classifieds for something affordable. And it wasn't just about frugality, it was survival. More than once, Michael took on small weekend coding gigs just to make sure they had enough cushion in their checking account. Still, he held on to his conviction. He knew he wasn't betting on hype. This company's product was solving a real problem for its customers. Leadership wasn't burning cash for growth at any cost. They were building carefully. And every quarter, he could see the customer base growing just a little bit more. The money was tight. The sacrifices were real. But in Michael's mind, every year he stayed was another step towards something much bigger than a bigger paycheck. He was holding onto a stake in a future he believed was worth the wait. The dot-com boom was in full swing, and so was the frenzy. But Michael's company wasn't chasing hype. While others burned millions on advertising and flashy offices, his company was quietly shipping product, improving performance, and landing bigger contracts. There were moments of doubt, especially when friends jumped ship to join startups that promised instant riches. Some cashed out early and bragged about their wins. Others weren't so lucky when the bubble burst. By the early 2000s, tech was no longer the golden ticket it once seemed. Many companies folded. Layoffs swept through the industry. Yet Michael's company held firm, built on the slow, steady growth he had bet on from the start. Then, in 2003, it finally happened. The company went public. For Michael, those stock options, pieces of paper he had guarded for 7 long years, were suddenly worth millions. The years of driving the same car, skipping expensive vacations, and living modestly had all led to this moment. But Michael didn't see this as a jackpot. He saw it as a responsibility. He didn't rush to spend it. He created a plan. First, he exercised his options slowly to manage the taxes because he knew one wrong move could hand a huge chunk to the IRS. Then he diversified, putting his money into index funds, bonds, and REITs. He bought 2 rental properties in the Bay Area, locking in steady monthly income. And he fully funded his daughter's college education before she even reached middle school. While many in Silicon Valley were watching their fortunes vanish in the market's ups and downs, Michael's wealth was secure, his income was steady, and his family's future was set. 7 years of patience. 7 years of living below his means, and one carefully planned payday that turned a modest salary into generational wealth. Michael's story isn't just about luck, it's a blueprint. Lesson 1. Treat stock options like an investment. Research the company's leadership, product, and market before you commit. Lesson 2. Live below your means with intention. A smaller salary only works if you can afford to wait for the payoff. Lesson 3. When you win, diversify. Spread your gains into different asset classes so one downturn doesn't erase everything. Lesson 4. Turn windfalls into income. Michael bought rental properties so his money would keep working for him. Lesson 5. Plan for taxes before you cash out. A smart strategy can save you thousands. Above all, remember, building wealth isn't always about speed. Sometimes the quiet, patient play wins the game. Michael Chan didn't try to look rich. He focused on becoming rich quietly. His story proves that with patience, strategy, and discipline, you can turn a modest salary into lasting wealth. The question is, are you willing to wait for your own 7-year payoff? Let us know in the comments. Thanks for watching.